Alright, this is the instructional video for the Qzeus algorithm. I have placed it here on the chart. It's completely stock. The recommended chart and time frame is going to be NQ, 5-minute regular candles. Make sure that you have electronic trading hours selected down here and not regular trading hours. When it is dropped, just default onto this chart. Again, this is completely default, not changing anything. These are my recommended settings. They're just the defaults in here. We can go ahead and look at the back test over the last 3 years, and this is what we get. Okay, so right there, that's the default and recommended settings. Now we'll go through what's in here. At the top, we have the very familiar time preferences. If you've seen our other algorithms, then this should look very familiar. The trading time string I have set by default to just trade the first few hours in the morning and to end at noon. This is based on my own personal experience over time with automated trading and with regular trading for that matter, as well as research that I've done in the markets, which shows that this is the time where you have the highest potential for a larger, more sustained move, which is what we want, right? Coming down to strategy settings. I'll talk about these presets in just a moment. For right now, let's go through the rest of this. Enable martingale. If you don't know what martingale is, essentially every time you have a loss, you double down the size of contracts. And it sounds really, really risky. And it is, in general, really, really risky. The reason why it's not as risky with this strategy is because of our higher win rate. We have a win rate that's usually right around 70%. Sometimes it goes a little over, sometimes a little under, depending on what else is selected. But it's normally right around 70%, which means you're not going to have more than a few losses in a row. Backtesting this with wide open contracts, put as many contracts as you want, martingale, just keep doubling down. 16 was the most it ever saw. So that means it doubled down, let's see, to 2, 4, 8 to 16. So it only ever had 4 losses in a row in the last 3 years of backtesting. It only ever found 4 losses in a row at most, and that's when it went to 16 contracts. So that is why max here is 16. But that is what martingale does. If you're using a strategy that has a really poor win rate, so you're talking like 55%, just over 50, right? You can use martingale to cover that up. But what that does is it opens you up to it going to, 64, 128 contracts and just tanking the entire account. That's what happened recently with the NERP algorithm. If everybody's been following that, it wiped out accounts overnight. It wiped out millions of dollars in accounts. And that's because it is a low percentage win rate algorithm that has that the fact that it's a bad algorithm covered up by the martingale. So when you have a higher win rate, martingale becomes much less risky because it doesn't just open loser after loser after loser. If you look back here on the back tests, you can see these spikes here, here, and here in the drawdown. Those were the 3 times it actually had 4 losses in a row. This one, I think, was 3 losses maybe. So as you can see, it doesn't happen very often. And typically the losses that it has are immediately covered up in the next trade because the win rate that it has will typically find 3 wins for every loss. So in that case, the martingale is not that risky. You can, if you'd like, limit the max contracts opened. However, I found that through backtesting, limiting that doesn't really reduce the drawdown all that much, but it did reduce the profit significantly. So you can do that if you'd like. And by the way, this is set up with 1 initial contract. So you can see right here, 1 initial contract, opening a max of 16. So the long boost option is risky. Let me enable it, and then we'll generate the same backtesting. Essentially what this does is when it finds conditions that I've identified as a significant enhancement to long positions, right? It means we're much more likely to win this trade. It will double down. So you can see our net profit went from 177 to 238, so it's an extra 70,000 in profit, but the drawdown also almost doubled. So it can be very risky. You see that right there? It can be very risky. So this will work well in some circumstances, or if you're maybe in a personal account, you're just running micros and you want to turn this thing full tilt, you don't care about the drawdown, then the long boost can work well. Personally, I'm going to recommend just leaving it off, but it is here for those of you that are a bit more adventurous. Okay, so let's go back to the initial one, and then I'm going to show you the range boost. The range boost is much, much safer, and that's why it's on by default, as well as Martingale. What this does is, again, through my research in the markets, my data science in the markets, I've found one particular condition that has a correlation, both Spearman and Pearson, of over a 0.6. There's one particular condition that says, we're likely to have a larger than usual range today. So what I did was I took that condition and I built it into this. So when it detects that condition, it goes down here to the range boost take profit multiplier, and instead of having a 1 multiplier, it will by default look for a 1.5. So on those days, it will look for a further move, okay? So if we come here, and I'm just using this for example, I'm not sure if it kicked off on this day or not, but if, right here was normally where our 1 was, and it says, oh, well, I think we're going to have a bigger range on this day, it'll move down here to the 1.5, and it'll take a larger profit because we're looking for a larger range on the day, so chances are higher that we're going to see that in a move. And you can see here, so we've got net profit 176, drawdown 35. Okay, so now let's turn this off and we're going to see the difference. All right, 176 and 35. We'll see the difference if we turn off the boost. The boost is quite safe. I would recommend not increasing that too much. Okay, so here we go. The drawdown's still the same. It's very close to 35. Net profit, though, dropped to 146 from 177, so we lost 31,000 in net profit. So it's a very safe thing to have on. The win rate goes down slightly with it on, which is to be expected. If you're looking for larger wins, every now and then you're gonna miss one. But the drawdown stayed the same overall and gave us more net profit overall. So it is quite a safe thing to have on. Again, you can adjust the take profit multiplier if you would like, and you can play with that. You can make this even safer if you just turn it down to like 1.2 or whatever. I doubt it would even have any additional losses at that point, and just add that little extra bit of profit. So that's what that does. Here, the max contract limit, again, that's this number right here. You can turn that off, leave it on. I recommend leaving it on, and with these settings, again, it never went over 16 anyway. You can drop this, so if we drop it back to 8, it doesn't do much. So max drawdown 35, net profit 176. Again, we can drop that to 8, and we'll regenerate it, and we'll have a look. It didn't really seem to help much when I was looking around at this back over time. So we can see here the max drawdown is still 35, and the net profit just dropped a little over 10,000. So it doesn't really seem to help us a whole lot by restricting that. And again, that may depend. If you're using this on a different ticker, a different time frame, something like that, then you can play with that. Or if you have restrictions on how many contracts you can run in your prop account, then that's something that you're going to have to adjust to deal with. The stop multiplier here, same thing as in QChronos and a few others. This chooses your stop. 15 is a really wide stop. You can lower this and still maintain the same back test, but I don't like doing that because that gets closer and closer to overfitting. So I just keep this really wide. This is essentially a catastrophic stop. So if it, all of a sudden some sort of Twitter message comes through, right? Somebody sneezes, Jerome Powell sneezes, and the markets tank, then this stop will kick in. That's really what it's there for, is just a catastrophic stop. There are other conditions that will close the trade if it no longer thinks that it's viable. And this is not the only one that will close a trade. So, again, just for catastrophic reasons. And that's why that's there. We do have the same profit loss trade limits you find in the other algorithms. We have the same prop trader compatibility, and we have the same custom alerts. None of this has changed from any of the other ones. It's really just this here. So let's talk about the presets. I did this to make it really easy for people. The presets that you have right here, this is actually the intermediate. It's, as it comes default, is the intermediate. Okay. So I've actually got a little tooltip right here. Conservative does not use martingale or the boosters. Intermediate uses martingale and range, and aggressive uses all. What I designed this for was just to make this thing user-friendly, honestly. So if you put this to conservative, this does exactly the same thing as the old QChronos set and forget settings that I came up with months ago. It is the exact same, and there it is right there. That's the exact same. Okay, and you can see the difference here that the martingale and range boost adds. It's 100,000 extra in profit. Of course, drawdown's going to go up, but that's right here. So the reason I left this in here is because it has much more. The drawdown is much more contained, of course, because we're not using martingale, right? So that's something that you can look at. Now here, let's check this out. So if you're trying to pass a prop account, right, turn off martingale, leave the range boost on, and let's see what we get here. Because a lot of times you've got that drawdown to worry about, right, in prop accounts, and we'll have a look at it here. And you see that gives you just a little extra profit. Doesn't really hurt the drawdown a whole lot. It's really kind of jumpy though. It's not great. I'll come back over here. Do something like this, right? So we'll say, okay, you can martingale once, right? You can double the initial position once. Let's see what we get there. You see, it's a little bit better than not having any martingale. There it is, right there. So, you know, your max drawdown is only 20 right here. Net profit has dropped a whole bunch. So there's different ways that you can play around with this. This is much smoother here to help us pass those prop accounts. This back here, I'd have to go back and look. I believe there was a very particular date that this thing was happening. This stuff was happening right here. Something crazy was going on in the markets. I probably wouldn't have traded it anyway. But you can see as things have kind of lined out over the last couple of years, it really just does quite well. So. Yeah, there you go. That's the instructional video on the new Qzeus. It is very, very close to QChronos. We're just adding a couple of extra things up here that you can play with and making it easier for people to put on the charts. That's really the big thing with this, right? We wanted to make this much more user-friendly, much easier for people to get it started with. And people have asked what I think as far as drawdown goes. So we can see right here, if it's martingaling to 2 contracts, we have max drawdown at 20,000 over here. And that's these big dips back in this area. So that would suggest 10,000 per mini, 1,000 per micro. However, again, I think if you avoid particular days, right, the days that we already avoid, I actually don't think you need that. I think it's going to be closer to 500. I think this can run fairly tight. 500 drawdown per micro or 5,000 per mini, I think, is where this thing can probably run. So that's where it is right now. Yeah, thanks for watching. Take care.